So this is what I'm trying to do every day. I am looking, I'm learning to identify the very moment price will return to an ICT PDA and use it uh, as the starting point of a price move that will draw to a liquidity pool that I clearly see on the chart. So right here, I could clearly see the sell side liquidity was here, and um, also this is buy side liquidity. So after the sell side liquidity is rated here, and then price reverses, and we got a small consolidation right here, even giving us a bullish order block below this opening price. This here is a good level to be a buyer on one of these order blocks. So this one is a propulsion block, and that there is another propulsion block. Normally, if it is bullish, I don't want to see price below these levels, right? So this didn't work as an order block because it is in premium. So that's not a level where you would buy. So technically, we buy here at the order block, which is an ICT PDA, which here it's also a reclaimed fair value gap. So let's make it clear. Reclaimed FVG right there. So it's a reclaimed fair value gap. Buy here, hold for prices to rally. This here is uh, another fair value gap formed right on the 930 candle. So technically, that is a fair value gap that I will keep an eye on. And let me see right here. So we did open with a very large opening range gap. So it's likely to draw back to Friday's opening range gap right here. So if we do get a fair value gap here, uh, I can use that as an entry too to target this level. So this is a draw on liquidity. Get rid of these lines. Don't like, oh, got rid of the wrong thing. Not the line. And so this I would consider as the first presented fair value gap. But I digress. This is what it looks like. So now On the downside, this here is my sell side liquidity. Look how price hit the bearish order block on M15 and rallied. So M15, there is this high here, where these relative equal highs. There are also a draw on liquidity. So right here, buy side liquidity. Here we're not even returning to this fair value gap. A lot of times, trading is a lot about waiting for the right opportunity, waiting for the time of day. That's what we do. We wait. We wait for liquidity pools to get engineered, and we wait for PD arrays to form. Then we take trades, and then we wait again for price to deliver to the liquidity pools that we delivered. So it's quite a lot of waiting. So you have to be patient. Patience. ICT says it teaches you patience. If you've never made mistakes trading, you will not understand what that means. Patience is crucial in trading. So, in a situation like this, what are we going to do? This is a fair value gap. This one is also a fair value gap. Technically, this is the first presented fair value gap because it is after 9:30, right? But this one is the ICT 2022 model, sell stops rated, the first fair value gap, buy, and target the buy side liquidity here. So that's 2022 model right here. Right there, that's the fair value gap. An order block, that's interesting. I need to know this one. Where are we going? As we said, we're drawn back to Friday's opening range gap. That's the draw on liquidity. But also, this is our NWAG. Here is the NWAG. New week opening gap. Here, here. So that we could see something there too. How is ES doing? Excellent. So there is this exercise by ICT, and let's see. There is no PDA here that I can use. Otherwise, I would use it to buy. But there is this fair value gap down here, so I've used it. So let's see. I'm gonna do the exercise here. Uh, it still works. Stop loss goes here. Go TP up here and see if it gets sold. So he said no, there has to be a round number, no added tick. see the exercise again. Okay. Right, filled. Let's see if it's gonna work. This is way, way, way into premium, but I'm just testing it. I, am testing to see if price is gonna draw up to this level here from this fair value gap. And since we could only enter at uh, a round number, that's why I entered there. Otherwise, I would enter at the fair value gap. So um, we'll watch and see if we can draw up to here. What is the liquidity? Yeah, good. So there is a liquidity pool right here. So that gives me uh, hope that my expectations can come to fruition, because this is the high of London, and this right here was a wick, this wick on Friday, a premium wick right there. That's what I'm measuring. So I will let it run its course. See if we can get here. If we don't, and price gets down here, think put my stop loss in the right place. So now I'll go back to Nasdaq. No trading. Exercise again. Okay, so you cannot risk more than 10 handles per trade. Um, yeah, I'm not risking more than 10 handles. So let's see what happens at 10 a.m. Take a screenshot for ICT. See if when it gets there, I'll take another screenshot. Nasdaq is my main market. That's what I'm watching. So now here is my buy side liquidity pool. That's what I'm interested in. So this range low to that high. What is equilibrium? Huh, right at the fair value gap. If this fair value gap is right at equilibrium, but if I use the opening range here, it is below equilibrium. There is an order block supporting it there. So, and this does look like a consolidation. I don't, I don't prefer this as a bullish PDA. I think it may be used. This looks more like a buy side of the curve in a market maker sell model. So we're going to see what will happen later after we run the liquidity. So right here, oof, it's gone. I think ES must have delivered. Oops. Yep, delivered. Okay. So I got to show ICT my fills, trading, show executions, executions. Got to share that with ICT. Back to NQ. Here is 7 gap. So technically, they should send prices higher again. Remember, we said Friday's opening range gap was the draw on liquidity. So we draw into it. So based on this, this here is my fair value gap. That is a clear draw on liquidity. So buy here, go sell at consequent encroachment. So let's try it. This is a demo account. Paper trading right here, not real money. So Let us try to buy. Oop! It's gone. Good, 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 good. Excellent. Look, consequent encroachment of opening range gap. Delivery. Beautiful. So from this fair value gap to that level, that's the valid trade. So this is the ICT PD array that I'm trying to identify. That's the level where I would take a trade and expect it to draw to a liquidity pool that I can clearly see on the chart. This is the liquidity level, Friday's opening range gap. That was a draw on liquidity. So right here, I buy and I target here. So let's just see how much that would have been. I don't, I'm okay. So buying there, stop loss goes there. We buy here, institutional order flow entry drill. Stop loss is larger than I would prefer. Where's TP? Where's the TP? Right here, consequent encroachment. So about 1 to 2 risk reward ratio. Not bad, right? Technically, I would put my stop loss here. If I were buying that fair value gap, I never want to risk more than $500 on a trade. So right here, institutional order flow entry drill, bump, 1 to 2, you're out. Day is over. Okay. So in the ICT universe, before we take a trade, we got to look for two things. There's got to be two elements on the chart that we can see on the chart before we take a trade. One is a clear, visible liquidity pool that can be a target, a draw. Two is a clear and visible PDA that's already formed, a PD array that's already formed. It's not going to form. We're not anticipating it. We still want to see it on the chart in price. And the PDA can be a fair value gap like here. So when this high formed and there is this fair value gap here, we can be a buyer, institutional order flow entry drill here, target this high. Very short, so not worth it. But here, this order block, this fair value gap formed, and we knew that this was the draw on liquidity, so we buy here, institutional order flow entry draw. So at least these two things, these two elements have to be there before a trade is, before I take a trade. So here you can use the fair value gap and still target the draw there, right? Institution, the Friday's uh, opening range gap. That was the draw. Now price has delivered to that. What is going to happen next? I don't know. I know that we are likely to revisit the opening range, and today's opening range going from this low all the way up to this level. We may do that. Um, and if we don't do it, then we are really, really bullish. And we're going to, this is probably going to be the low of the week. So, but I'm watching. This here is a fair value gap, and this is another fair value gap right here. So I'm watching to see um, if this level does offer resistance. The prices are not going to go higher, and this fair value gap fails, then I can look for a reason to go short. And now I don't, I'll put this here. This is sell side liquidity now that I want to note. Sell side. So I'm no longer interested in using this fair value gap as a buy for the simple reason that it is in premium, and also we are trading at a level that can offer resistance. I don't want to. Okay, let me note the fair value gap. So we can see here that every swing high that forms, price returns to a fair value gap and blows it. See that? Blown. This one, boom. See? This one here, fair value gap, fine, it's gone. So uh, this level is where I'm watching to see if we draw up to it. Remember that inside this opening range gap, there was a first presented fair value gap. I think we're trading inside that one now, but I don't want to put it here because that would make my chart too busy. It's already very busy as it is, but I like it this way. Here again is another fair value gap. So I'm watching the consequent encroachment of the opening range gap here to see if it is going to offer support, if we're going to use it to draw up to this level. So I see here that this fair value gap has been traded through. So that can be the beginning of something bad for the bulls. But I'm also watching this other fair value gap here to see if this low is gonna stay in place. So this fair value gap also failed. So that becomes a very interesting. It could act as an inversion level to send prices lower. So I'm watching to see. So yeah, as you can see, price has been consolidating here. Um, and also there was this fair value gap right here that we retraced back to. So right now, I'm watching this to see if it is going to be used as an inversion fair value gap with a breaker, or um, this fair value gap is going to send prices higher, not considering the breaker, which is unlikely. So right now, uh, I expect bearish prices based on this inversion fair value gap. But I'm going to watch and see if that works out. I'm not interested in taking a trade here because if it is an inversion fair value gap, it will break below this other fair value gap. So this is the one I would want to consider as an inversion fair value gap to trade, to take me down to this first presented fair value gap. So right here, the reason why I don't want to take a short here is because of this fair value gap that can still send prices higher. And if that happens, this will become a reclaimed fair value gap later on. Since we have these two fair value gaps here, this one here and this fair value gap, we can price can consolidate. It's not very much range between the two, so it doesn't make sense to take a trade there for me. But between this fair value gap and this fair value gap here, that is enough range. So price can spool, can expand with larger candles. Note this golden rock formed here. So we can see here that our breaker worked and the Friday opening range gap worked now as an inversion level. So price here stayed below consequent encroachment. So that's a good thing. I'm watching to see if we break below this low and how we do so. So this is the importance of waiting. See, price is still not delivering to the downside. Why? This fair value gap right here. It's causing all this consolidation. So you don't want to be part of this. This is how you see when price is going to consolidate. You got two fair value gaps back to back. and price breaks down, it's not going to go anywhere. So we gotta wait. It could still go higher. I'll close the stream at 11 a.m. So in about 7 minutes, 5 minutes. What is ES doing? Also consolidating now. Yeah, I think the purpose of the assignment is to show us how easy it is to get 10 handles in ES and also trust your bias. Like buying here, fair value gap there. If this is your target, it's pretty good. This sell here is not, did not respect it. There was no fair value gap here before I sold. And also, we had not taken buy side liquidity, so it did not qualify. But this one here, sell side taken, any fair value gap once price, before price gets to where it needs to go. Before reaching target, for terminus, got a fair value gap, come buy. Right here, this is an order block. So after it formed, you can put a buy limit here on this one. Target this. This is 10 handles, but powerful. Actually, Okay, it's about time to close. See, consolidation. So now they will learn an important lesson. When is price going to consolidate? When you have two fair value gaps next to each other, like not too far away. This generally leads to consolidation because this is bearish and this is bullish. So up, down, up, down, up, down until smart money later is like, you guys are wrong. Boom, gonna attack you, you know. So keep an eye on this. This is where we stop for today. We'll resume again tomorrow. Until then, be safe.